Okay, good morning, viewers. This is your tutor again. We are looking at the inventory valuation, and this is going to be our last method, because we said we are going to be using the same question and we do all the inventory valuation method. We've finished first in, first out. We've done last in, first out. Then we are remaining with the weighted average cost, which we are going to do now. So we are using the same question, and that question was about the Tassejuice Uganda Limited, which is located in the downtown of Kampala city. And they said it is the leading producer of fruit juice in Central Region. TJU buys a variety of fruits from Owino Market, such as oranges, pineapples, and mangoes, which are supplied directly to TJU's store. Proceed, the fruits are then processed, packed in different brands and dispatched to shops and supermarkets. On 31st March 2019, the store ledger card showed 350 kilograms of fruits in the store, valued at shillings 4,500 per kg or per kilogram. The company uses the weighted average cost method, that's WAC, WAC, to value the inventory of raw materials. The following information relates to the fruits received and issued during the month of April 2019. We have the purchases and the issues. Then we have the required prepare TJU's store ledger card and determine the Roman number 1 value of the closing stock as at 31st April 2019. It means since they are doing this, they are counting their stock at the end of every month. It means they are using the periodic stock taking, whereby you compute the stock after a certain period of time, not like when you're using the perpetual stock taking or inventory method where you count the stock continuously on a daily basis. But this one, you can proceed with Roman number 2. It says the direct material cost charged to production. So we go to our solution. We start with the name of the company, that is Tassejuice Uganda Limited. What are we preparing is the store ledger card or the store ledger account using weighted average cost method as at 31st April 2019. We have the purchases, we have the issues, we have the balances. But here, for the balances, we can add Let me add something here for the unit cost. I will explain why I'm adding this. Let me add for the unit cost because I want to explain something in detail there. But if you know what you are doing, even if you don't put it there, then we go for amount. Said amount that is in shillings. It's also in shillings. Say this one is in shillings. Can try to enlarge this and we see this one is in shillings. Enlarge this one also a bit so that we'll be seeing everything. So we can start. We said on this one, let's include also the unit cost. There's something I want to explain. We can start. We said we had a balance of 350 kgs that were valued at 4,500. Before I proceed, let me try to explain to you something small. When we are using average, that is the weighted average cost method or weighted average costing method. Here we are using the assumption that the goods we've got, we value them at their cost. We get to get the unit cost, we divide the total cost we are spending divided by the number of units so that we get what will one unit cost, and that's the cost we are going to be using when we are issuing out. If let's say we buy stock at the same time, let's say if we buy 10,000 units and we buy also other 10,000 units, we combine the costs, we get the total. After getting the total, we divide by the total number of units, we get the unit cost. This is just an average, and you know from mathematics that this is like a mean. It's an average where you are getting the total over the number of what you are dividing. So let's proceed. We said our balance here on, this is 2019 April 01st. Particulars, we have balance brought down or balance brought forward. So we put it in our balances. The balance, we said it was 350 valued at 4,500. Then our price, our total cost will be this times or multiply it by the unit cost, and it will give us that will be our cost. So we can go to the second transaction which happened on second. That was a purchase of 300 units at 1,380,000. So we purchased. The total cost is 1,380,000. We bought 300 units So these were purchases. These were purchases. So we need to know the average or the unity cost. The way we are getting this by dividing the total amount divided by the number of units is the same way we look for the, it's like we are looking for the average cost per unit. It will be this, the total cost divided by the total units. And if that will be that, then our stock will increase by this plus this. The only change is when we have issues. That's when you are giving out stock, that's when we shall be knowing what we are going to use, which price are we going to use. So it will be this here. For the unit cost, you don't put, it will be this plus this. Then if you want to know what will be the cost, if you are to issue out, we are going to be issuing, we get the average there to be equal sign this divide by this, the number of units. It means that if we are issuing out anything we are issuing, we have to issue that item at this price. This will be the price, and that's the only difference between the FIFO and the weighted and the LIFO. This weighted, for it, we are just getting an average cost per unit, and that's how we get everything there. This one you can even round it off, because here it is in, we can, but since we are using Excel, let's ignore those ones. We can minimize them if we want to. So let's go to the second transaction, which happened on 8th. We issued out 400 units. These 400 units, now we are not looking at it was on 8th. These are issues. These issues, we issued out 400 units. Let me hope they're 400. Yeah, they're 400 units, the one we issued out, but we are going to value that at this price you are seeing here. We copy it and we paste it here. It will be, sorry, it will be that. So if you want to find the total cost, it will be this multiplied by the unit cost, and it will give us that. When we get this, since we are issuing out, we reduce the stock the same way we did the one for LIFO. That minus this number of units we are issuing out. Then for this one, we said we don't put. We only put when we have got the cost. And to get our total cost is this. Since we are issuing out, we have to less this. And what will remain there, it will be this. And this stock will be valued at this. This will be the total cost. So if you want to determine what will be the unit cost per each, it will be equal sign this divide by this, and we get that. So if you happen to get any issue, we are not issuing it at this price, we are issuing at this one. That's the difference between those two. Then we are saying on 13th, we purchased 500 units at 2 million 350. It is 2,350,000. We bought 500 units. These were purchases. So to get our unit cost, it will be this divide by this. The same way we are doing it here is the same way we do it this side. It will be this plus this. That's our number of stock. So this that there you don't put, then we put our total cost. Since we are purchasing, it means we are going to be increasing the stock. It will be that plus this. Then to get what if we happen to have any issue, we shall be issuing those goods at this divide by this. That this will be the cost that we shall use when we are issuing out. This they said it happened on 13th, so we go on 14. I think this one is the easiest. On 14th, we issued out 350. These were issues of 350. This 350 is going to be issued at this place. We'll copy it and come and we'll paste it here. Then we can try to look for the total cost that we are going to spend. It will be this multiply by the number of units. We shall be getting that. Since here the stock is reducing, we shall less this minus the 350. It will give us 400 units. Then when you come here, it will be equal sign this. Since we are issuing, we less minus that. So we find the average. It will be this divided by this. If we happen to issue any item, we are issuing it at this cost. So that's how it is. You can go to the next one, next transaction, which happened on 20th. On 20th, we bought 400 units at 1,860,000. 400 units at 1,000,000. Said 400 units at 1,860,000. It is 1,860,000. And there were 400 units. Let me hope there are 400 units. Yeah, on 20th there are 400 units. So we are valuing that. These were purchases. Put the narration. Purchases. This happened on 20th. Then what will be the unit cost? It will be this divided by this. Then we adjust our balances here by saying this plus this, since we are purchasing. Let's enter. Then we try to get also our total cost. It will be this equal sign this plus this. Then we get the unit cost. This is the average cost. It will be this divided by this. So the next issue will be issued at this cost. Then on 22nd, we issued out 650. We issued out 600. It is on 23rd, 22nd. These are issues. Issues of 650. We don't mind about the number of units we are issuing. We just mind about the cost. What are we using to issue as in terms of the unit cost? Paste that one there. Then we try to look for the total cost. It will be this. Multiply it by this. So since we are issuing with less, the stock is going to be reducing that minus this. So when you come here, it will be equal sign this minus this. So we need to know what will be the unit cost. It will be equal sign this divide by 150. So we can go to the next one. The next one is the next transaction happened on 24th, and we purchased 360 at 1,728. 1,728. Saying here it is 1,728,000. Purchased the number of units. There were 360 units. These are purchases that happened on 24th. What will be our unit cost? It will be this equal sign this divide by this. This one we are getting it, but it is not even necessary. If you know what to do, you can even exclude this one when you are looking for, when you are working with this weighted average cost. So long as they have given you the total cost, this one you may even ignore. But if they give you this and this, when they have not given you this, then you are supposed to include all of them. But that one, as per this question, we don't need it. Then here it will be equal to this plus the number of units we've purchased, and our inventory will be 550. What will be the cost? The total cost will be this plus this. Then the unit will be this divided by this, because what we want here is only this column. This column is the one that makes us to get the cost that we are going to use when we are issuing out the stock. And that's what we need. So on 25th, we issued out 260. 20, is it 25th? Yeah, it is 25th we issued out. 25th we issued out. These are issues. Issued out 260 at this. This will be our cost. We copy that, we paste it here. Then we try to get the total cost. It will be this. Multiply it by the number of units and it will give us that. Then this stock is going to be reducing. It will be this minus this. Press enter. Then we go to the last one, which will be cosine this. Since stock is going out, we are reducing minus this. Here we can get our unit cost, the unit variable cost per unit, the unit variable cost, which is that. Then you can go on the next transaction, which happened on 26th. We issued out 100 units. On 26th, we issued out 100 units. And these 100 units were issued at the same cost. This. We copy and paste it here. Cosine this, multiply it by this, will give us that. And these units are going to be also reducing. It will be cosine this minus the number of units we are issuing out. To be cosine this minus the total cost of the issues. Then we can get our unit cost. It will be cosine this divided by the number of units. It will be that. So we go to the next transaction, and the next transaction took place on 27th. We bought 320 units at 1,488,000. 1,488,000. We bought that at 1,488,000. Bought how many units? They were 320. These are 320 units. These are purchases. Purchases. This one we forgot to write issues. This one happened on 27th. Is it 27th? Yeah, it is 27th. Then you can get the unit cost, which will be cosine this divided by this. We add just our the inventory, which is that, plus the one we have purchased. You can also increase our total cost. It will be this plus this. So we compute the unit, the average variable cost, which will be cosine this divided by the number of units. Then we go to the next transaction. The next transaction, which took place on 28th. 28th, we again made a purchase of 200 units. These 200 units, they happened on 28th. These are also purchases of 200 units at a value of 984,000. 984,000. So get the unit cost here. It will be that divided by this. It will be that. Then what will be our new inventory in units? It will be cosine this plus what we've bought, and it will give you that. So what will be our total cost? It will be cosine this plus this 984,000, which will give us that. So we get our unit variable unit cost to be that, meaning if you are making any issue, then we shall be issuing at that price. On 30th, this is the last transaction, we issued out 300 units. On 30th, we issued out, these are issues, we issued out 300 units, and these 300 units, they were valued at that. So we copy that and we paste it here. Then we can get the total cost, which is this, multiply it by this. Then we also reduce our stock to be equal sign this minus this. It will give us that, and our total cost will be cosine this minus this, which will give us that, and we can get our unit cost as this divided by this. So that's how it is. That's how simple it is when you are doing with, because we are done with that, but they said here they wanted the figure for the closing stock. Our closing stock is this. That's the value of our closing stock. It is 175,9076.13, valued at this, and the number of units, they are 370. The number of units, they are not supposed to change at whatever method you are using. The number of units, they must be the same. The only thing that will change, it will be the total cost, because we are using different cost units. I hope you've got that. Here we can come here and we say that our closing stock is 370 kgs at valued at 1,759,076.13. That's how it is. Here there is no proof because this amount is valued at this. When you multiply this times this, you must be getting this. So there is no proof. Maybe to get the direct material, here for the direct material used in production, for the part 2 that is requiring us to get that, we said we add up the issues. Can get it from here. We get equal sign this plus this, because these are our issues, plus this plus this plus this, then we get our answer. It will be this. And that's everything is done now. We can try to put, at least to put some, can try to put these borders and we see how we can generate something. We put all the borders, and we can also put the separators so that we get to identify them, because you are seeing when you put the separator, you are removing the points. Of course, when you remove the points, then you'll be getting that figure when you just remove the points, but you can maintain our points if you want. And I hope that's done, so we can stop here for today, and we'll see how we can do other things. Just subscribe to the channel so that when something is posted there, you can be able to review and try to understand what you are supposed to be done. Thank you, and God bless you.